Hey folks, welcome back to the channel. This is Jason, host of Fighting Words Financial, and today I want to do a video that's actually been requested by a number of folks on my channel, and that is SoFi versus Square. But before I get started, let me apologize. You guys may hear some screaming in the background. It appears that my neighbor has decided to throw a pool party without me. I'm just kidding. It's a bunch of kids screaming in their pool. And my daughter has also decided to make cookies and use the blender right as I hit the record button. And this is probably the fifth or sixth time that I've tried to do this video, but I'm going to get started anyway. So another reason I'm doing this video is because it's pretty timely. It looks like that SoFi is going ahead with the merger at this point. They just refiled their Form S-4 with the SEC. Now let me remind you folks, they refiled the form. They have to go back through some of that process for SEC approval because they had to readjust how they were handling the characterization of warrants on their financial statements. Plus, they have to send proxies out to all of the shareholders. It's going to take 3 weeks to get all of those votes back and counted. So think of this as a minimum 1 month deal before we're going to see this merger go through. All right, so minimum 1 month, probably 6 to 7 weeks. If it happens sooner than that, I'll be ecstatic. All right, once again, I'm editing in the self-promotion after the fact. Don't forget to like this video and subscribe to my channel if you like. And if you really want to help out this channel, please check out our Patreon. It's only $5 a month, and I'd love to see you in the Discord discussion. All right, so let's talk about SoFi versus Square. I want to start off by talking a little bit about Square and about sort of fintechs in general and why what's going on with Square is such a big deal. In the last 7 years, Square's Cash app has reached over 60 million users, and they've done this all organically. This is a milestone, 60 million users or 60 million accounts that JP Morgan took more than 30 years and 5 major acquisitions to reach. Now, SoFi and Square are just two of many popular fintechs in the public market space, but I'm just going to be covering them today. There's lots of other companies that I could be covering, right? So fintechs are changing the way that we transact, changing the way we invest and lend and understand and make our money. So many people know SoFi because of recent ads revolving around their investment app. But this company was actually founded on student loans and has a bunch of different avenues to make revenue. And Square, while they're known mostly for their Cash app, I actually got to know them through their point of sale solutions, and they too have a bunch of different revenue sources, and they expect to grow their multiple lines of businesses over the next couple of years. So we're going to take a look at both SoFi and Square today. We're going to compare the pros and the cons from the two from the standpoint of an investor. And I think by the end of this video that you're going to understand these two companies a little bit better. And I'll let you know at the end of the video what I think about these two companies and which one of these companies will do better in the coming years. So let's jump right into it. Square was founded in 2009 by Jack Dorsey and Jim McKelvey, both of whom still work together at Square. One interesting tidbit about Square is that at the founding of Square, the company name was actually Squirrel, which I think is interesting. But as Jack Dorsey was pitching this idea to Apple, Jack found out that Apple was calling its own internal payment system by the same name, and that forced Jack to change the name to Square. The idea of Square was initially made with the purpose of changing the way that people make and process payments. Square wanted to incorporate a way to make mobile payments available just by using your phone, your computer, or your tablet. So here's a quick quote from Jack Dorsey, which was taken directly from their product launch in 2009. "We wanted to allow people to very easily and quickly within 10 seconds be able to accept these plastic devices as payments, be able to accept credit cards easily and efficiently, and just really design the product experience. Really design the payment experience, which to my mind has never really been designed before. That's what excites us." As you may have noticed, this dream that Jack Dorsey had slowly became a reality, and Square is one of the biggest names in fintech and in retail payment processing. Now, Square has a number of products and services, but Square's main source of revenue is through payment processing. This may be through their Square Cash app, their new Square credit cards, or through transactions processed through their point-of-sale hardware and software systems. As most people know by now, Square also offers investing and financial services like stock trading and cryptocurrency trading through their apps. Square offers several hardware products that are very important to the revenue streams, from their card readers, their point-of-sale stands or terminals, to be used in restaurants and retail locations. They also offer accessories such as label printers, barcode readers, and receipt paper. These products are integrated with Square's mobile payment and point-of-sale software solutions. These business-oriented software solutions include Square Point of Sale, which is their most used service and can apply to most types of businesses. Square for Restaurants, which can be used in restaurants to help improve efficiency towards front-of-the-house operations and back-of-the-house delivery or pickup. Square Appointments, which also assists with bookings and schedulings, think something like a hair salon or nail salon. And Square for Retail, which is perfect for inventory management, sales, and staffing. In addition to their hardware and software solutions, primarily focused around small businesses through retail, restaurants, and appointment services, they also offer marketing services and, of course, financial services, which is where they seem to be on a collision course with SoFi. This includes the lending arm Square Capital, which specializes in small business loans and lines of credit, Square Payroll, and Square Customer Engagement, which is a customer relationship management software solution or a CRM solution, kind of like HubSpot or Salesforce. Light versions, though, they're definitely not at that level at this point. Now, Social Finance, or SoFi, was founded in August of 2011 by a group of Stanford students, Mike Cagney, Dan Macklin, James Finnigan, and Ian Brady, looking to develop more affordable options for students who are forced to take on debt to fund their education. The current CEO is Anthony Noto, who was appointed back in March of 2018 after SoFi weathered a bit of a scandal. Now they put that behind them, and SoFi's goal now is to build a platform for customers and businesses for them all to come to one place for all their financial services. So how does SoFi make money? Now, I made a previous video on SoFi that went really in depth into everything about their products, but as a recap, SoFi makes money via loan securitization, FDIC sweep programs, payment processing fees, referral fees, and a whole lot more. Now, their complete product list is available on their website, but I'm just going to go through a couple of those right now so you get an idea. SoFi Relay, SoFi Credit Card, SoFi Invest, and SoFi Money. As you can see, SoFi has a wide array of products similar to Square, and while they do hit a lot of the same topics and concerns for their clients, they also target very different customers in some ways and should be able to succeed in parallel with each other. But the real question you're probably asking yourself right now is which one is likely to have a higher return on investment in the long run? Look, it's 2021 and banks still haven't been disrupted, even though this is something that has been predicted for 2 decades now, maybe even longer than that. However, it feels like the events of 2020 inched us closer to a tipping point of that fabled disruption of banking, and it feels a lot closer than it ever has before. Let's take a moment to acknowledge, though, that I am biased in favor of disruption. This is simply the type of investor that I am. It's simply the type of person that I am. I also hold long positions in both of these companies, both SoFi and Square. But if disruption by FinTechs is really going to occur and traditional banks are really going to go the way of the dinosaur, I think that it's really important for us all to acknowledge right now that Square and SoFi are not the only companies in this space. There's lots of other companies in the space, some bigger and some smaller. And I think that it's really important to recognize that any one of our favorite companies, even these two, could end up being the America Online of the FinTech revolution. And if you guys don't know who AOL was or America Online was, please look that up. It's a really good story that sort of illustrates that sometimes that leader in one technological revolution ends up failing in the long run and ends up going under. So Square right now currently sits at a valuation of about $115 billion, while SoFi's pro forma market cap as of late 2021 is about $15 billion. In addition, the pro forma enterprise value of SoFi is about $13 billion. At first glance, all other things being equal, SoFi clearly looks like the better buy just based on the fact that it has a lower market cap sitting at $15 billion compared to Square's $115 billion. They just have more room to grow. But are all other things actually equal? It's actually kind of hard to compare Square and SoFi directly as competitors because although their business models sound very similar and they offer similar products and services, they do offer products that are slightly differentiated and tailored towards very different markets currently, very different market segments currently. Now, both companies are racing towards this mythical nirvana or mythical center in which their platform is the only one platform that any one person might ever need for their entire lives. but they are getting to that mythical nirvana in very different ways by targeting very different classes of customers. So let's compare some of the major aspects of the target demographic for these two companies. So who are Square's customers? Square's initial client base was small business owners who wanted a simple, low-cost, low-commitment alternative to traditional payment processors. Square's primary customers are food and beverage businesses, retailers, health and beauty spas, fitness locations, professional services, nonprofits, and entertainment professionals. In the last few years, they've been aiming more towards individual consumers with their Square Cash app and newly developed credit card services. So who are SoFi's customers? SoFi is taking a different approach to expansion, but it's really taking a play out of the traditional banking playbook. Concentrate on your highest margin customers. You're going to get 80% of your business out of the top 20% of your clients, and SoFi is doing this really, really well. SoFi explains their target customer as someone who's called a high earner, not well served. These are typically well-educated millennials who make somewhere north of $100,000 per year, and there are probably a lot more of those than you think. Most of these folks have financial offerings from multiple banks, and they have fractured finances spread across different banks, and they really aren't as well served as they could be if they were consolidated with one bank. SoFi has a sophisticated cross-selling and relationship consolidation strategy for this client group that they're employing right now. SoFi offers services similar to Square's business customers, as well as offering a full range of products to the individual on their app, which includes SoFi Money, SoFi Invest, SoFi Relay, which is credit monitoring service with money tracking, home loans, student loans, and credit cards. So which company is growing faster? According to Seeking Alpha, SoFi is on track to exceed 3 million members in 2021. This would be a year-over-year increase of 75%, a full 100 basis points higher than the year before. As impressive as that might seem, that's really not the most important metric to look at when it comes to SoFi's platform growth. The most important metric is this: 220% growth of their multi-product members. They went from 125,000 multi-product members at the end of Q4 of 2019 to 400,000 at the end of Q4 2020, and they estimate that this is going to rise to 775,000 at the end of 2021. So that's fiscal year growth of 95% in just a single year. This is the most important metric. They're looking to have a broad relationship with their highest dollar clients. Remember when I mentioned that SoFi had this sophisticated cross-selling and consolidation strategy? This is how it plays out. The more products that you have with any financial company, the less likely that it is that you're ever going to leave. If you notice an ad for SoFi recently, understand that that product that was advertised to you isn't SoFi's ultimate aim. SoFi's reasoning behind the recent ad blitz for SoFi Invest was probably that for the moment, it was simply the easiest market to acquire. And if you get on SoFi Invest, it offers them the opportunity to cross-sell different products and solutions to you. Their multi-product customers are their highest revenue customers. SoFi's platform is meant to be a multi-product platform that creates sticky relationships with their clients. It will probably create a mammoth, vertically integrated company with layered customer relationships and the potential to really be that one-stop solution for the financial concerns of an entire lifetime. Now let's compare SoFi's growth to Square, and according to another Seeking Alpha article, in 2019 alone, Square's seller and Cash App business reported gross profits of $1.39 billion and $458 million respectively. What's more, Square's revenue continues to grow at an exponential rate with a recorded 40% compound annual growth rate over the past 5 years. Square is projecting similar growth rates in the future. This is incredibly good growth in the financial sector, folks. 40% compound annual growth rate is nothing to laugh at. Now, while SoFi has recently grown much more rapidly than Square, a lot of that is because they were a much smaller company to begin with. SoFi is actually projecting a growth rate similar to Square, with an estimated 43% compound annual growth rate for the years 2020 through 2025. Based on these forward-looking statements, which these are forward-looking statements, folks, take them with a grain of salt, there really isn't a lot to differentiate between the two companies. So how large is this opportunity right now how large is this digital wallet opportunity? Well, the answer to that is it's absolutely massive. Digital wallets have substantially lower acquisition costs for customers, far lower than any similar traditional bank product such as credit cards or checking accounts. And according to ARK Invest's research in their 2021 report, they stated that if each of the estimated 230 million US digital wallet users were valued at $19,900 in 2025, that's an average, of course, the US digital wallet opportunity would be worth $4.6 trillion. So the answer to that question is friggin' massive. The opportunity here is just absolutely friggin' massive. So what's my bottom line here, folks, on SoFi versus Square? Overall, I think that SoFi and Square are both incredible companies, and I don't really favor one over the other. But I know you guys really want me to pick and choose here, so that's what I'm going to do. They are slightly different companies, though, and they are at slightly different points in their trajectory, and they have slightly different paths. I imagine that both of them actually have the potential to succeed alongside one another and target different market segments. However, I think that at current market valuation and where they are in their business life cycle, I do think that SoFi will likely be the better performer. It's going to be a better performer than Square over the next 5 years. In part, I think that's because of the path that Square blazed for SoFi in the fintech space. They've just had the opportunity to learn from all of the things that Square has done. Now, it's impossible for me to tell the future. I don't have a crystal ball. No one really knows how these companies are going to perform, but I feel pretty good about the decent sized position that I've taken in SoFi over the long term. Now, these are just my opinions, folks, and they should not be viewed as financial advice to buy, sell, or hold any security. I have no way of predicting the future, just like everyone else on the internet here. Anyway, just wanted to share that with you guys today. People have been asking me for it. If you like this video, don't forget to like and subscribe to my channel. If you want to check out my Patreon, it's only $5 a month. I'd really like to see you guys there at some point. Have a nice day, and I'll see you next time.